Now, today's trading takeout is on something that's quite important, and it is objectifying the trend. Now, how can you objectify something? Well, you are able to do that by using something like a moving average. And I think moving averages are probably the best way to be able to do this objectification of a trend. Now, why is that? Well, it's using quite a lot of data to be able to come to a decision over a certain time period as to whether something is above the average or below the average. What does that mean? If you're above the average, it means that you're trending to the upside. If you're below the average, it means you're trending to the downside. But there's two different ways in which you can interpret this. Now, we know, and I've spoken about it from previous videos, that markets tend to either trend or mean revert. They mean revert about 70 to 80% of the time, and they trend about 20% of the time. It depends on the time frame, but of course, what we would be looking at is the longer term trend. Now, the longer term trend in indices, because of the way that an index is comprised, is up generally. Okay. It's because the weaker firms are replaced by stronger firms, which leads to a support level in the index. So you can probably look at this and say, all right, well, if something is well under the longer term moving average, it means that there's some form of likelihood that it wants to return back to either the moving average or above the moving average to regain a stronger trend. Taking this information, it means that you can then develop some form of strategy. So if you want to look at standard deviations or a percentage move away from the moving average that you found through testing over time, the extent to which it becomes more of a success, then these are the ways that you can start incorporating these beliefs into the market. If you think perhaps that you're better at selling a market, then you can do the opposite in a stronger uptrend. So various ways to objectify something rather than saying, oh yeah, that looks like it's going up, which it absolutely might be, but there's more nuance to it. Use these indicators. Don't be put off by people that say don't use indicators, because I think they're the best way to understand data rather than just having your subjective human biases put on top of it.